Okay, Minette, I need the share screen so I can share my stuff. That's not working.
You're the host now, so you can do anything. I don't have that.
Okay, I'm the host. Okay. Okay. I'm just trying to see if I can get my file up. It says the host has disabled participant screen sharing. I don't know why I get this problem every time.
You should be able to share it because that's what I do with every other Yeah, once I make you a host, you can be able. It says share screen, so click on the.
Yeah, I say share screen and it gives me host disabled participant screen sharing. So I don't know whether it's my computer or what. Let me see if I can do it here.
Participants. Hold on. Okay.
I do one
Make
thing.
me the host back. Hold on, you make me the host back. Then let me see if I can. It's not.
But if I'm.
Anyways, let me reclaim the host and see.
Maybe it's my computer.
Yeah, I think so because it's never been a problem.
Okay, can I because you know what, my laptop doesn't work very well. I'm doing it on my phone and my computer.
Yeah.
Let me send you the Excel file. Can you share it?
Yeah, send it to me because I can, when I take back myself as the host, I can share it. But see, I wish you could do it.
Okay, let me see what we can do here.
With this baby here, I might not be able to follow every step.
Can you see anything? No, right?
Yes, let me. So now you're the host.
Yeah, I know, but I'm doing it on my computer. So show captions, notes, participants, reports. Okay, I'm just going to send you the file. Okay, you know what I'll do? Let me see if this works. Just tell me if this works, okay?
Okay.
Can you see this? Is it clear?
It's clear to an extent. We can't fully see the exactly what the writings are. So you've tried to share your screen. Let me see.
No, it's not working on my computer. I realize it's my computer problem. So if you can see this, and I think it's my computer problem, and then I'm on my phone, so I cannot share this document on my phone. Or maybe I can. Let me just take a picture and see. Maybe I can take a picture.
Okay, send it to me. Let me see if I can. Send it to me. Let me see. Let me see if I can share it there. You just tell me to click next.
It's just one document and then there's another document. So I'm going to just see if I can do this. I took a picture and I'm going to see if I can do that. Sorry, guys.
I should have actually.
Can you see this now?
Hold on. Yeah, Tania has started sharing her screen. Okay. Yeah, we see it now.
Okay, I'm just going to take it more clear. Okay, another picture. So that works. Then that's good. So hello everyone. I am going to today I have something a little different to share with you guys because really without numbers it's very difficult to understand what we are trying to say, right? So I'm going to share some numbers here. Can you see that now? Minette?
Yes, we can see it. We can see the screen.
Okay, so I'm going to just share this. Okay, there's an example here. So we've been talking about so many things, dividends and salaries and all the stuff that we've been trying to educate you on. But in terms of numbers, neither of you know what it looks like. And everybody would want to see what does it boil down to in the form of taxes or in the form of what can I take home, what gets remained in the company, all that kind of stuff. So what I did is I did an example here, which will basically walk us through right from the time that you get paid from the agency to the time that it goes into your bank account and everything in between. Okay, so if you just follow through the example, I'm going to walk you through each item. So if you see the first line, so basically this is a complete example. So the first line, which says income at 10,000 per month for 12 months. If anybody cannot see or cannot hear, just put your hand up or you can just interrupt me. So income at 10,000, I took a simple example so that it's easy to understand. So say, for example, your agency is paying you $10,000 per month, okay, for 12 months. That works out to $120,000 for the year that comes into your bank account, okay? Then approximate deduction. So the approximate deductions is basically your expenses. So these are the expenses that we've been telling you can write off as an incorporated person. So like your car expenses, your internet, your telephone. And I have another spreadsheet after this example. I'm going to walk you through those. Your office expenses, all those things estimated at about $15,000 is what you can write off. Okay, this is on a higher side. Some of you might have more, some of you might have less. So I've just taken a example for the example's sake. I took 15,000. The next line is your net income. So your income minus your expenses comes to about 105,000. All right. So that's your net income after expenses. Now from that, we were talking about T4, right? Salaries. Can everybody's following so far? Is everyone following so far?
Yes.
Hello? Yes. Okay.
Yes.
Yeah. So suppose you took a salary of say $5,000 a month. All right. So $5,000 a month works out to $60,000. So that salary there, $60,000. And the extra 3,400 is basically the CPP cost to your company. So you know that when you have a T4, there is CPP on that, right? So there's one portion of CPP that comes out from your salary, the employee share, and there's another portion that the employer has to match. So both those shares go into your CPP. So now since you're incorporated, you are both the employer and the employee. Okay. So that 3,400 is basically the cost to your corporation. That is why it's added to the cost of the 60,000 that you will be pulling out. Now that goes into your CPP. So if you look at it, it's a cost to your company, but it's going into your own pension plan. Okay, so it's not really a cost, but cash flow, yes, it's going out of your company. So after you minus the 63,400, you will get a net taxable income of 41,600. All right, so that is basically, now that 63,400 is basically a cost to your company, so it comes off your taxes. The company does not have to pay tax on that. Now you have a net taxable income of 41,600. So what happens with that? So if that remains in your company, you're going to pay tax on that at 12.5%. Okay, which works out to 5,200. Now, if you see near the salary line, I have a personal column. I wanted to just show how it flows. So basically that 63,400 has gone into your personal tax. Okay. So that's where if a T4 is created from the corporation, and that goes into your personal income tax as a T4 as your taxable income. Now, I'm kind of departing from this line because I want to show how it flows. So on that 63,400, you will be paying taxes. So it says taxes on the personal deducted at source, which is 9,500. So 9,500 is basically the taxes that will be taken every month from your payroll and given to the government. So at the end of the year, your taxes are all paid up. You have to file your taxes and you may or may not get a refund. It all depends on your personal tax situation. But I just wanted to show you the numbers. So now so far we are at what? We paid corporate taxes at 5,200 and we paid personal taxes at 9,500. All right. Then you come down to the next few lines where it says net income. Okay, so your net income. So then 41,600 was your taxable income. We take off the taxes because tax is also a cost to your company. 5,200 is a cost to your company, right? After that, we have 36,400, which is basically your income that is left inside your company after you paid yourself salary, after you took out your expenses, and after you paid your taxes. So now what do we do with this money? It's like, it's just sitting there. I want it. I want to take it out, or I want to invest it. So there are a couple of options that you can do. So everybody with so far, are you all with me? Everybody, any questions so far? If everyone can unmute and just say yes or thumbs up or something, that will be nice. So I know that you all are listening and I'm not talking to myself.
Oh no, it's really going. Good.
Okay, all right. So now what do I do with this 36,400? It's a problem because I don't want to leave it there. Or for some people, $120,000 is not enough. So I need all that money in my pocket. Okay. So that is the amount that we would flow out as a dividend. So if you move to column 3, you see $35,000 dividend. That is something that we would give you as a dividend on a T5. Okay. So that's called a T5. So now you will get a T4 under the personal and you'll get a T5 as a dividend. Now the government says, I understand this is your money, but it's not, it's your corporate money. It's not your money. And there's a difference between that. The moment you incorporate, you're giving birth to another entity. And that means that you cannot do whatever you feel like with the money that is in your corporation. So every time you take out money, either as a salary or as a dividend or something, that has to be taxed in your hands. Now, the 35,000 is a dividend, which is also after tax. If you noticed, we already paid the 5,200 tax on the profit of the company. So the government says, okay, you've paid 12.5%. So when you take that portion out as a dividend, we will charge you lower tax rate. So on that, I did the calculation basically on a tax return, and the rate came out to about 22%, okay, based on the tax bracket, because remember, you also have a T4. So based on this example of taking $60,000 as salary and $35,000 as dividend, you pay $7,600 in addition tax, in addition to the $9,500 that you paid on the top. Okay, so if you come down, now I'll show you the taxes. So if you see the tax rate, we pay 12.5% in the company, we paid 15% on the personal, and we are paying 22% on the dividend. And the reason for the 22% is now because you're gone into another tax bracket when we added the 35 onto the 60. You get it? Now you're gone into a 95%, 95,000 tax bracket. So that's like a different bracket altogether. So the marginal rate of tax goes up. And that's the reason why we suggest you do RRSP or you do some other tax saving strategies, which your accountant will work with you to bring that 22% down to something better. So the next line, when you see total taxes paid, is what I want to show you. So the total taxes paid is the 5,200 on the corporation, the 9,500 on the personal, your T4, and the 7,600 on the dividend. So total taxes you've paid is 22,300. Now, when Ida and I do the taxes, we do understand that whether it's a corporation or whether it's personal or whether it's dividend or whatever it may be, bottom line, all the money is coming out of your pocket, correct? So we need to take all these components into account, the total taxes into account, to see how much taxes you have paid in total, so that we can minimize that. So if you see on this example, you've paid a 19% tax. So 22,300 is 19% on the 120 that you made. Okay. Now, if you had a T4 for 120,000, I've given you the example just below that. If you had a T4 for 120,000, and when you have a T4, the taxes get deducted at source by the employer, and you don't even see that amount. So the taxes at source would have been 30,000. Okay. And you would have got only 90,000 in your hand. So as an employee, you would have paid a 25% tax as opposed to 19% as a corporation. So there is some benefits of being incorporated. And the other beauty of being incorporated is that it gives you a lot of room to manipulate, to be creative, to be to plan your income as to how much to leave in the corporation, how much to take out as a dividend, how much to take out as a T4, and to basically tweak it and fine tune it to come to the sweet spot where the taxes will be the lowest, okay, for each person. So I wanted to run this example for you to understand that as an employee, you're always going to be paying more taxes as opposed to being an incorporated person if you're smart. Okay, so the savings is about 6%. And if you see at the bottom, it comes out to dollar amount of about maybe $6,000 to $7,000 in savings. And that's quite a bit of money, I would say, to save if you be smart and plan your taxes with an accountant in a very individualized manner, because each plan has to be done based on each person. Nobody is the same. Everyone's situation is the same. Everyone has different family structure, different spouse structure, different properties. So there are so many different components that have to be worked into the personal taxes. So this is an example that basically would answer a lot of questions. So now I want to ask if anybody has any questions on any of these numbers.
I have a question. My name is Daniel.
Okay. Hi, Daniel.
Hi. Thanks for being on this platform and giving an opportunity to explain how this works. So my first question is essentially, can this be done in retrospect? So like I see the deduction from the 120 with the expenses, and it lays you down to 105, right?
Yeah.
When I mean retrospect, like most people, as it comes to the end of the year, they're looking back, or halfway through the year, they're like, oh, I used all the money. I see that the most beneficial way would be to then use the dividend and put it in a TASA or a SP, like a registered savings plan. Can you roll that over to the next year?
When you say roll that over, what do you mean? Explain exactly.
Oh, sorry. Okay, so like let's say
you took out the 35 in 2023. What is your intention?
Okay, you put in a TASA, but then actually you would get penalized when you take it out of the TASA. No, actually you wouldn't. It's a TASA.
What's your tax-free savings account, right?
Yeah. So you wouldn't get penalized. If it was in a registered savings plan, then you'd get penalized.
That's right. Yeah, you won't get penalized for anything other than your RRSP. So if you put it into your RRSP right off the bat, you will save. See, say for example, if you were a person who only wanted 60,000 and that's all you need for your living expenses, okay, and you took out the 35,000 and you say, okay, you know what? I got so much room in my RRSPs. I'm going to take this 35,000. I'm going to keep 5, go on vacation, put the 30 in my RRSP. That 30,000 will give you back. Let me just see. 30,000 multiplied by that will give you back 7,500 in tax. So out of the 9,500, that will give you back everything that you paid on your dividend.
Okay.
And that tax money is for you to keep, because basically, if you were on a T4, you would never get to see that money.
And
Right?
so that being said, when I say roll it over to the next year, like let's say that tax season is done, now you have access to that money that you put in the TAFSA.
Yeah, you can roll it over to the next year. You can put it into a tax-free savings account. When you say TASA, it kind of throws me off. It's actually TFSA.
TFSA, yeah.
Yeah. So
sorry,
you can put it in your TFSA, but remember, TFSA does not give you immediate tax break, right? It just grows
No, it
there.
doesn't. No, it doesn't. No, it doesn't.
Yeah.
But
So
it lowers the income, the taxable income, though.
that is true. Yes, it lowers your taxable income, because that is after tax money, and then any income on that is not taxed.
Okay.
Right?
I have
So you
another
have to be
question, but
wise.
I'll leave it open for somebody else.
Yeah. Okay. But you have to be wise how you use that extra money, because there is also something called time value of money. So money in your hand today is not the same worth by money in your hand tomorrow. So
are you talking about opportunities?
Yeah. So RRSP would be a better opportunity to save tax money today, as opposed to a TFSA in somebody who is in a high tax position.
And can you explain why? Or like give one example why?
Because say for example, you put that $30,000 into your RRSP, you get $7,500 instantly back. Okay.
Oh,
Whereas
from the tax season.
From
Okay,
the tax refund, and then you can take that 7,500 and roll it over again into something else, or put it back, pay some debt or something, and that will save you interest, right? Whereas if you put it in your TFSA, you're not going to see the profit till God knows when.
But okay, so the money now is then locked into your RSP, because like if you take it out from there, unless it's like first time home buyers or something else, you'd get taxed, I believe, how much? 15%?
That's true. Yes, that's true.
Okay.
But then again, we're only talking about that strategy. We are not talking about your situation. So say, for example, you are not in a position to put 30,000, okay? And you want to put it in your TFSA because you use your TFSA as an emergency account as well. Then you may be able to split it, put 15 and 15.
Okay. Okay, that sounds better.
That is very, very, as we said, it's very, very specific to each person's situation, is where we would come in and then advise you.
Okay. I have another question.
Any more questions?
Yeah, I have a question. Good afternoon, and thanks for the information. My question is, what if you're a sole proprietor?
Okay.
Can you please clarify that for me, please?
What is a sole proprietor?
Yes.
So
no,
sole
what
proprietor,
if in this particular scenario, I think you're dealing with incorporated.
Okay, so I understood. So say if I just forget about, keep the same scenario, forget about the corporation, think that you made $120,000 in your sole proprietorship, okay? And you still had $15,000 of expenses, and you still had net income of $105,000, okay? In this case, there wouldn't be a salary, because you can't pay yourself salary from your sole proprietorship. You can only pay it from another entity, all right? So your $105,000 would be taxed, and that would possibly be taxed at 25 to 30%. So you would pay like $30,000 in tax, which would be similar, very similar to your T4, other than the fact that you get to write off expenses.
Okay.
Did you understand?
So basically, I will be taxed 25 to 30%.
That's right. So around 26,250, about 26,000 as opposed to 22,300 is what I would say. So you would be taxed little less than a T4, which is 30, and you would be taxed little more than the corporation, which was 22. So you're in between. You'll be around 25, 26.
Okay. Thank you.
So that's the difference. Yeah. Welcome. And
I
then
think
again, you
someone
can do
asked
an
about.
RRS. Sorry. Go
No,
ahead.
go ahead. Go ahead.
And then I wanted to tell her that then you can still do an RRSP and save some taxes. Okay, so that's an option. Yeah, go ahead.
I have another question too. What if, I don't know, probably I watched a lot of videos in terms of like on the American side, but I'm just talking in regards to like paying down debts, lines of credits with your business. Is that able to be deducted as well?
If you take out money in any form to pay off any debt, it has to be either a T4 or a T5. So it will be taxed.
It'll be
Right?
taxed. You said, okay.
It will be taxed. So what you do with the money after the fact, we don't care. Nobody cares. As long as the taxman got their tax money, you can pay off debt, you can go have a big party, you can go on vacation. They don't care. But the moment you take out money from the corporation, you're taxed,
Okay. Regardless of anything. Okay.
regardless of what it's being used for.
All right. That sounds.
Now, there is something called shareholder loan, which we talked about in the last few presentations, that you can take a shareholder loan, but then you got to either pay it back or then you got to declare it as income in the next 2 years. So say you have excess money sitting there, even after you took out a dividend and you have some big debt that is costing you a lot, maybe you can take out $20,000, pay off that debt, and then the following year, you can either pay it back to the company or you can show it as income. But it gives you that time that you don't have to show all that income in 1 year.
So can you do that in retrospect? Let's say you already used money. Can you use that as a vehicle to transfer over money to the next tax season or the next two tax season? Because you said you have 2 years.
Yeah, you can. 60
Okay.
months. They want to see 60 months. So 60 months you're allowed to, not 60 months, sorry, 24 months. 12 and 12, right?
24
Two tax
months.
periods. Yeah, 2 tax
And
periods.
how much money? What's the max?
There is no max.
There's no max. Okay.
As long as you can show, say the government comes and audits you and they want to
Yeah.
see your last 3 years taxes and you
Mhm.
took out money every single year into shareholders loan. Basically,
Mhm.
what they want to see is that every time you took out the money, you did pay it back. Every time you took out the money, you did pay it back. It's not just sitting there and just accumulating.
So like, okay, hypothetically, like let's say, because a lot of people I would suggest or I would assume, you know, are experimenting with this travel nursing thing and incorporation. This is their first year or their
Yeah.
second year, but they never filed for last year. So technically, they're just anxious
Yeah.
in regards to. I would assume a lot of people here are on this platform because they're anxious in regards to the
Yes.
tax season.
Yes.
Hypothetically, couldn't you, like, let's say if there was a big, you would have to pay, or you did your calculations and there's a lot that you would have to pay back. Hypothetically, couldn't you roll it over to that 24-month, what's it called, shareholder loan,
Yeah, you
and
can.
then chip away at it for the 2 next years? Worst case
Yes.
scenario.
Yes,
Okay.
you can. And that's what the
Nice.
accountant will come in and help you out with.
Okay, cool. That's
Okay.
all I have. Yeah.
Okay. Anybody else?
Tania,
Yes.
in a case where you're the one that put in some money into the incorporation, say.
Sorry, I didn't get that. Can you just say again? I got a call in between. What did you say?
Oh, sorry, my phone is dancing in the back.
Yeah, it's breaking up. I can't hear.
Can you hear me now?
Yeah, I can.
Okay, so in a case where instead of the incorporation giving you money, you put some of your money to help support the incorporation to operate on other business transactions, which is just because you're incorporated supported. That is like.
I can't. I'm losing some of it.
Can you hear me?
Basically, that you're lending some other company or some other business venture, right? Is that what you're saying?
Yes, yes.
So
So
then
in that case, during taxes, they take account into the they take account that money. They take account that money and like how does that work with relation to your taxes as the employee to your incorporation, supplying money into your incorporation?
So are you putting money in, or you putting, or you taking money out?
I'm putting money into the incorporation from my own
Then
personal
that would be
money.
correct. That would be a shareholder loan to your company. So basically, you're lending money to your company. When there is excess money, you can pay yourself back tax free. So say, for example, let's take an example. You put $30,000 for whatever reason into your company, or maybe when you were starting your travel nurse business, you had certain expenses to incur and you hadn't got paid by the agency yet. And maybe you lent your company $10,000 to meet those initial startup expenses. That becomes a shareholder loan to the company. So then later on, when the company gets paid, you can take that $10,000 and pay yourself back. Or you can just leave it there if you want. If you still need to use it in the future, it's up to you. There's no tax implications on that.
Yes, because I know there are some people that have been buying, they've been paying for their licenses, they've been paying for some of their training from their pocket, but they don't because their incorporation wasn't
functionally. Some people didn't even have bank accounts. They just opened the corporation, but they didn't realize that they had to open a bank account. So they had this corporation, but then they were running their banking through their personal account. So then what the accountant has to do is basically take all that personal income and expense, transfer it into the corporation, and then basically the other side of it would be either due to the shareholder or due from the shareholder, depending on which way it would go, right? So that's also could be a scenario until the corporation bank account was opened. So that's one thing that's very important, to keep the corporate cash flow and your personal cash flow as far as possible separate. So try to get a corporate credit card. As soon as your corporation is eligible, keep going to the bank and checking, because when they see a lot of money going through the account, they are in a better position to offer you a credit card. Even if it's $3,000, just take it, because once they see that you're using it, then the credit limit goes up. But keep trying to get a corporate credit card and try not to use your personal credit card. So then it's very clear and precise.
That corporate credit card, sorry, is that specifically to monitor and track your transactions? Or other than that, what is the other beneficial? What's the benefits?
It's basically to keep your accounting clean and clear. So that see, what happens is the more you muddy it up or you make it gray, then when somebody looks at it, they're looking at more stuff than they should not be looking at. So somebody comes in and says, oh, I use my personal credit card and my personal account. So then they have access to look at they have the right to ask you, okay, I have got to see all your personal credit cards. I need to see your personal stuff. I need to see. So a lot of stuff comes into, it gets exposed. Right.
Okay.
So it's better to keep it precise. Yeah. So that it's very clear cut, no questions asked, all expenses from corporation, and that's it.
Okay.
So if there's any more questions on this, then please ask now, because I just want to share another slide.
I have a question.
iPhone 1.
Go ahead.
I was just wondering if you're
in the background. I think there's somebody's
somebody needs to be muted.
Yeah, if you're not speaking, just mute.
So if you're applying to an agency as a nurse under a corporation, should you be claiming HST for the corporation?
We spoke about this in the earlier ones, and we said that most of the nurses, because of the kind of service that is, it is exempt.
Okay.
So the agency should not be charging. I know most agencies have been making this mistake that they have been paying you HST when technically they shouldn't be. It's up to them if they want to charge, but you shouldn't be charging them HST, and they shouldn't be paying you HST. Okay, so you all are exempt. So the HST.
That's great. Thank you.
Tania, you got muted. You got muted at some point when you were saying that they shouldn't be paying us HST.
You check. No, I'm fine. I'm not muted. Can you hear me now?
Yes, you're back on. You got muted for a second or two there. But that's
Okay, for a second or two. Okay,
maybe
that's fine.
was a mistake something. Yeah.
Okay, so if we're done with this slide, I just want to quickly go through the expenses. So then somebody's raising their hand. Somebody has a question?
iPhone.
One hand up.
Actually, before you move on, do you mind explaining the 36,400 on your slide, your current slide? What's that part?
The 36,400 was your net taxable income. So the 41,600 just above that, right? That is your net taxable income after expenses and salary.
Okay.
Then you pay tax on that at 5,200, and whatever is left is 36,400 that you can leave it there. You can distribute it. That's the net profit
Sounds good.
after tax. Okay. Yeah, sure. Okay. Okay, so can you see this slide now? This was something I shared sometime back with all of you. I don't know if everybody's got it yet, but this was a list of expenses that gives you an example and kind of basically helps you to think, brainstorm as to what are the items that can fall into these categories. So if you have, Minette, can you mute everybody then maybe because there's a lot of noise in the background?
Okay, let me see if I can mute because you have the host authority.
Okay, fine. You can take. Okay, I can't do that. Okay, let me see if I can mute. There's somebody who's. Can everybody just mute their phones, please? So,
8985, please. Can you mute? AR, please. Can you mute? Four one six 6808985. Please, can you mute?
okay. So these are a list of
Just kick them out the chat.
Oh no, that's okay. I will just send them a text message.
Tania, just click on the three dots on the person's name, and then you click on mute. Since you're the host, you can do that.
Okay. Meeting settings. Mute. No.
If not, I can just reclaim host and mute it. You still
the 3 dots. Security, disconnect, background effects. That's it. Okay, anyway.
3 dots across there. When you put your cursor over their picture, over their name, then it shows the 3 dots. Then you can click on it and then mute.
No, I maybe on my phone I cannot see it.
Oh, got it. Okay, sorry about that.
Hold on, Tanya, I'll get it.
All right. So thank you, Minette. So when we are thinking in terms of expenses, we got to get the creative juices flowing and we got to think about, okay, what are the things that I can write off or creatively make a business expense? And I think Ida went over this last time very nicely, explaining as to the nature of the business and what might be an expense for you does not necessarily be an expense for me. But these are some of the categories here that kind of fit into most of the businesses. So if we could go through most of them, like for example, promotion expenses. Promotion expenses could be something where like you talk to somebody, or you go and have a meeting, or you have an agency meeting, or you meet somebody in the agency, or you took somebody out for a you went out for a meal with somebody, but you discussed business. So those could be considered as it could either go under meals, it could go under meetings, or it could be a promotion expense where you're trying to promote yourself in order to get a contract. Okay, so you have to keep all the receipts, and you should kind of make a habit to write behind the receipt what it was, who you went out with. So then that way you don't lose track. For example, business fees. Your business fees, of course, everybody knows your memberships, your subscriptions, your dues. If you subscribe to Google, if you have a .com account, if you have you use Dropbox, if you use so many other things we use these days, right, on the internet. So those dues and subscriptions, membership fees, those could all be classified as business income. Then if you have courier postage expenses, those you have to see how we can classify them as business income. If you're paying any kind of insurance, so besides life insurance is not technically tax deductible, but then again, there are some ways around that. And Jolene can touch on that. It's something called key man insurance. So if your policy is written in such a way that it says that your corporation has insurance on the key person of this corporation, then it's tax deductible. Then you might have disability insurance, critical illness insurance, health insurance, business insurance, liability insurance. All those kinds of insurances are deductible as a business expense. Then coming down, sorry,
I'm just gonna add here that just to add to what you were talking about, the importance of the insurance in the company. I just want to share my experience with you guys that sometimes we hear about all of this insurance, that, and we just take it for granted until when we are presented with a situation, because I've had to deal with, it's unfortunate for me because I've had to deal with a lot of those milestones that comes with travel nurses. And maybe that's because I started a while ago before it was really a thing in Canada, or before we had a lot of information about it. So please, let's take their advice serious, because I've had a situation where I was critically ill. Unfortunately for me, I could not make any money, and the agency, of course, wouldn't give me money, and the government as well couldn't give me money. And even though I had applied for small business EI, it wasn't due because you need to have been registered for a year before you can qualify to receive any benefits, right? So on next week, Tuesday, we're gonna have Wednesday, we have the financial education, and they talk about insurances. So please, our advice that we attend and listen to what they are saying, because it's quite applicable, and you never know when you'll be a victim and will need those services. Moreover, it's tax-free, it's tax-free, so why not benefit from it?
yeah, that's right. Just don't buy any kind of insurance because somebody sells it to you. Always figure out, always ask the questions. Why do I need it? Is it worth it? And I'm sure Jolene can cover all those topics. Critical illness is one of the big ones that people buy, which really does not serve its purpose. So then let's go down to office expenses and supplies. So all of you need scrubs and gloves and masks, and I don't know how many other things that you'll need. Some of them are supplied to you by the work. Some of you have to buy it yourselves. So make sure you capture all that. One more important thing, try not to pay cash, because when you pay cash and you lose the receipt, then it's gone forever because no one's going to be able to ever find that. So try to pay anything that you think is legit, would possibly remotely go as a business expense. Always buy it on your debit or your credit card, so that when you're going through your stuff, or your accountant is going through your stuff, at least they will see it and they will ask the question. So avoid cash as far as possible. So supplies could be that. Office expenses could be printers, paper, cables, a monitor, desk, chair, couch, anything to make your office space nicer for yourself. Lighting, a lamp, what do you call it? Pens, paper, ink, those kinds of things. So make sure these things all add up. You know, we don't realize if it's $5, $10, $15 here and there, but when you go over the year, they do add up. Legal and accounting expenses, of course, anything that you pay for consulting, anything you pay to anybody for getting any advice, even if you'll pay any agency fee or anything like that, make sure to capture that. Then we would go with business rent. Now, a lot of you travel and a lot of you move house just for the sake of your job. If you happen to have to store your stuff somewhere in the interim while you're moving, some of that portion could be considered as an expense. Okay, so there's some creativity about moving costs here because you are moving because of your job. So there is an expense called moving costs in your tax return, which is your personal tax return. That is something all of you need to make note of and all of you need to take advantage of. It's quite a big deduction. So it's called moving expenses. And I think the form is a T1, TN1 or something like that. But write it down so that you can talk to your accountant if you're actually moving from one province to another or you're moving far away from home. That's a good deduction, as well as taking advantage of the smaller deductions in relation to moving. Then your telephone, cell phone, internet, pager, anything that you use for communication, your headphones, speakers, whatever, can go as telephone cost. Then below comes your vehicle expenses. So I don't know if that got captured here, your vehicle cost. Is that there? Because it's a longer thing. Can you all see vehicle expenses, car expenses in the picture? It's at the bottom. So the car expenses, so most of you would need to use your car. Some of you get reimbursed as a part of your agency agreement. Some of you don't. And some of you also have a car provided to you depending on where you travel. So depending on each one situation, the car expenses have to be captured and provided to the accountant to do the write-off. Similarly, pardon?
Sorry to interrupt you. There's a question here that you probably just want to quickly brush it. It says, does the moving deduction still count if you're moving for a short period? Like we go for a short period of time throughout the country for work. Is that considered moving expense or?
It can be explored. Yes, it can be explored. If it's a short-term contract, say 6 months, it can be explored. You had to move there for a reason. Then there'll be certain questions that you will have to, certain criteria that you'll have to fulfill.
Right. Okay. Thank you.
Okay. So if some of you purchase a new vehicle, then that also information needs to be given to the accountant. If you lease, that lease expense. So basically keep your bill of sale. Bill of sale is very important. That picture or that document needs to be given to the accountant if you have bought a car in that year. That could be a significant deduction. What else? Maintenance and repairs, tire change, putting on snow tires, all those expenses can be prorated depending on how much you need to use the car for work. And there's one more screenshot that I'm going to share. Just at the bottom of the sheet for your home office. So then coming to home office, a lot of people ask, okay, what about home office? Do we get to deduct home office? So let me just show you here. So home office, these are the items that you would track for your home office. So basically, I would say every travel nurse has their home office because you don't have an office outside the house. Like me or Ida has an office outside a house and we have an office inside the house. So we have 2 offices, but most of you are traveling. So basically you're either in the hospital or you're at home. So your home office would qualify because that's where you would do all your administrative work, your bookkeeping, maybe store your supplies, and that qualifies. Certain percentage of your home qualifies as a home office deduction on your either on your business tax or your personal tax, depending on where your accountant chooses to write it off. On your corporation tax, it would be called something as occupancy cost because your incorporation is occupying space inside your house. So then you can allocate like a fixed flat rate or you can allocate a percentage, but you should track your home office expenses under these categories because number one, it gives the accountant a very clear idea of what the expenses are. And number two, it gives you a very clear idea of what your expenses are so that if you're spending too much in any particular area, you can track it and maybe cut it down. So I always recommend everyone to keep this kind of a detail because number one, it helps you for your taxes. Nothing gets missed. Number two, you have everything at a glance and you can see where your money is going. You can see how much you're spending on each item. And if something is excessive, you can start scaling it down. It helps you. Like looking at it is so important. Whereas when it just goes on the credit card or the debit card, we just tend to lose track of it. But when you keep looking at it and you keep entering it on a month-to-month basis, it gives you some kind of an accountability. So this is a twofold purpose of keeping your expenses in this format month to month. So I'll open it up for questions on this topic now.
Wow, this has been very, 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 I don't know what to say. This is such an amazing session. Like, Tania, you are the gem. Thank you so much.
Thank you.
Please, guys, ask
Not at all, I'm
questions.
happy.
She's a house of brain. I don't know what I can call it. Ask her all the questions. She would answer you. Okay, I got a question actually.
Yeah.
What if you write, say for example, you bought stuff from Facebook for your office shop and you pay through e-transfer or maybe cash and then you write a receipt for it?
Yeah, that's fine. As long as you have tracked that you took the cash out from the bank or somewhere. See, everything has to be traced, right? Cash should be like if you paid cash for it, that cash should have come from somewhere. I'm going very much into detail right now. It's not, no one's going to go that much into detail, but maybe you took out cash from the bank, you had it in your purse and you want to just pay cash. You can write a receipt for it or document it on your phone so that when you come home and you want to actually put it into your spreadsheet, it's there.
Sounds good. Okay, because that's what I do for my shop. So
yeah, so for you, Minette, because you have another thing, another side gig going, you need to keep two spreadsheets. One for your travel business, one for your.
Okay.
So you for your expenses that are specific to each business, the upper portion of my sheet would be applicable to each one, but the lower portion, which is basically your telephone, vehicle expenses, home expenses, that you would keep one because then that your accountant would allocate. But the ones that are very specific, like supplies, okay, which supplies goes for the scrub business, which supplies goes for my nursing business, which meals and meetings I did for my nursing business, which meals and meetings I did for my scrub business. So that's something that maybe you can be specific or you can put notes in your spreadsheet. You know, you can put comments in the Excel columns saying scrub business or this business or that business, that kind of thing. So try to keep it separate.
I'm actually going to work more on my QuickBooks because QuickBooks also is really something that is good to
yeah, that is, yeah.
Yeah, to clean up.
Just a quick question. If you're buying the car for the benefit of writing it off under the business, does it have to be the insurance and the purchase of the car? Do they have to be under the business name or could that be under my personal name?
Preferably, we suggest that it be under the business name because then there's no gray area there. Like no one's going to, like if the bill of sale is under the business name, then there is no argument that the car is not a business car. But that being said, if so happens that the car is under your personal name, say for example, you were travel nurse before, you didn't have a corporation, now you are a corporation, but the car is still in your personal name, that's fine. What you would do is more like a reimbursement. right? So you'll have your car expenses every month and you'll allocate a portion towards your business, and then you just write a check from the business to yourself with an expense report saying that this was the expenses allocated to my travel business, so I'm taking this money out to reimburse myself for the expenses that I paid. So again, that's yeah. But if you are buying a new vehicle after you got incorporated, the better way to be is to buy it in the name of the corporation and then put all the expenses like the lease, the insurance to come out from the business account. So then that's a very clean and clear cut way.
Okay.
Okay, does that answer?
Yes, it does. Thanks.
Yeah. All right. So what we would like from each of you or from all the people who are attending the session would be to send messages or even emails saying, this is what I would like to hear more about. This is what I would like to hear more details about. So then that way, Ida and I can make these sessions more meaningful, more detailed, and more fresh rather than going through the same things again and again. And that way you guys will get exactly what you're looking for. So that interactive feedback from you all, like this today's session was based on feedback. So that's the reason why I did it this way, because I'm like, yeah, you need to see numbers. You need to see what these things boil down to. When you see numbers and dollars and stuff, then you understand the situation better. You understand things better as opposed to just giving you a general scenario, right?
Okay, thank you. Just one quick question here. Where can we find this Excel sheet for the expenses?
Minette has a copy. You just send her your email. She will send it to you.
Okay.
And the Excel spreadsheet, basically, I just clipped it. It's got the whole 12 months with formulas and everything. So basically, you can start using it. Like if you save it and you can start using it, like it's ready to use.
Okay, great.
I'm going to share it in the group for everybody. Please watch the group. We have too many people for me to send one-on-one emails to everybody. So I'm going to share it on the group. Please, everybody watch the group.
And if anybody still doesn't have it, they can email me. Everyone has my email. So I'm happy to send it to them.
Yeah, I don't mind. It's just that we have so many
No,
people.
I know, Minette, you have your hands full. So if I get one random email or two random emails, I can always send it. Any other items? I think I covered everything. So if there's no more further questions, then maybe we can close the session, and feedback is important so that we can bring you some more good
Can I
stuff.
ask you one more, sir? Just pardon me before you go. From your previous slide, are you saying it's possible to take both dividends and salary from the business, or is one or the other?
No, yes, both. Both, and the mix or the ratio can be changed anytime. Okay, so it can be changed in the middle of the year, it can be changed at the end of the year, and even on top of the salary and bonus, salary and dividend, you can even take something called a bonus, but the bonus will go on your T4. So there's a lot of there's a lot of room to change things, move things, work with your accountant. The numbers can be changed anytime during the year.
Okay, thank you.
Welcome.
I was also going to ask, is anybody here in need of an accountant? Because I know some people have been asking in the group. Is anybody here in need of an accountant?
Yeah, just drop. I think someone was asking in the group chat the email address. So if you could put that in the chat box, that would probably be the easiest way.
I have the Excel actually right in front of me. I'm going to share it right now.
Ida, can you also put yours in the chat, please?
Ida left already. But
then maybe you can share it later.
Yes, I'll share it as well. Let me share.
I'm going to give it your list accounting.
Let me share it right now to the bookkeeping so that you guys we don't forget it. Tania?
Yes.
Please look at this screen. if this is all, because I see that your current expense sheet has way more stuff than this.
No, the next sheet. Minette, that's the first sheet. There's another sheet, second sheet and third sheet. There's one sheet which says personal information. Second sheet has expenses and the third sheet has income information.
All on, it's okay. So there is
So
income.
if you share that whole file, they'll get everything.
Okay, never mind.
Yeah, that's the one. Yes, there you go.
One, and then that's the next one.
Yeah.
Very up there. Okay, perfect.
Yeah. So mostly you will use the expense one.
This is awesome. Okay. This is super. Yeah. Is anybody here from Facebook, or is everybody from the WhatsApp groups?
WhatsApp.
Okay. Do you guys know we have a Facebook group as well? We also have a Facebook group. So if anybody wanted to get connected with that, I'll also share it, just because Facebook promotes a wider audience, whereas WhatsApp only limits us to 1,225 people per group, or 1,025 people per WhatsApp.
Someone was asking about the cost and the services. So I'm offering special for first time, first year, all inclusive. So that is the fee. And if anybody wants further questions, I have a whole detailed information that I send, what's included, everything. So just email me and I'll send that to you if you're interested.
So let me know, check your WhatsApp right now. If you see me, I'll just share it again on our WhatsApp, Tanya, so that in case anybody asks on WhatsApp there, you can also just forward it.
Yeah, sure.
Yeah, instead of doing the whole email.
Sure. Okay, maybe I should put it on the group then. And I am a CPA. Someone asked, is Tania an accountant? I'm a CPA. I've been in practice for 18 years and I mostly do businesses. I do CRA audits. I've got a very good track record with CRA. And I also represent clients in tax court. So
wow,
that's a little bit about me.
You guys see, we don't use any kind of accountants. We use professionals who's got this system in the middle of their hands, not the kind that's going to make you pay $30,000, $40,000, $50,000, $60,000 in taxes. These are people who know they're in and out of the system. They know CRA at the back of their hand. I actually had one of my other accountants tell me that their best job is to fight with CRA on their.
Yeah, that is my best job too. I love the challenge.
You guys have people that will fight that case for you.
Yeah.
Apologetic.
I will fight for anybody. Even if you're not my client and you come to me and tell me I got a CRA problem, I will take it on.
They would fight for you unapologetically, because CRA intimidates us, to be honest. They intimidate.
That's right. Yeah. Everybody gets intimidated and they shouldn't. If you've done nothing wrong, there's nothing to be afraid of.
Just like nurses have it figured out in the hospital and in the care sector, these guys right here, they have it figured out in the CRA system sector.
Tania, I think someone's asking like where are you, like I guess your office resonates in Toronto, GTA?
So I'm in I'm in the GTA. I have an office in Scarborough, right off the 401 Markham and Progress, and then I have a home office in Pickering. I have clients all over Canada. So I have clients in Alberta, Vancouver, BC, Saskatchewan, but I haven't met them or anything. So everything can be done online as well.
Okay.
Now everything is online. So most people I don't meet. It's all everything through the internet, email, photos. And since all the CRA stuff is now also online, it's a lot easier. Like the globe has become a lot smaller.
Oh, I have a quick question. We can either talk about it now or maybe make it a topic for next class. If you're working in multiple provinces, how does that work? For instance, Newfoundland has, I believe, a 15% tax rate or ratio compared to Ontario, which is lesser. So how does that work if you work both in Ontario?
It will
and
depend on your corporation, where your corporation is incorporated. That governs the jurisdiction. Doesn't matter where you're earning the income from.
Okay, great.
Okay, because the agency just pays you, you're responsible for your tax, and your tax is governed by your incorporation province. Okay,
So basically, you're saying we don't need to be incorporated in both provinces?
yeah,
we
that's
do
what
need
I'm
to be.
kind of saying. But sometimes, you know, what happens in like places like Alberta and BC, because of the workman's compensation and certain other things, they require you to have an extra provincial license. That's the time when you're forced to get an extra provincial license in those particular provinces. I know those are the two provinces that are problematic ones, and it costs money. It costs like $500 to get an Alberta extra provincial and another maybe $300 to get a BC one. But I tell my clients to avoid until push comes to shove. That's the time we do the extra provincial corporation. Until then, there's no requirement.
Okay, thank you.
Thank you.
Okay, Minette, I think the hour is up. So that's a good question, though. We'll bring that up for the next time. Multiple provinces and stuff like that. I'll discuss. I'll put that in my presentation.
Do you
Thank
want to
you.
use that as your education for next week, or?
Yeah, I'm going to use it as my education for my next time when I come on, and something else which I get in the next 2 weeks, whatever feedback I get and whatever people want to hear more about, that's what I'm going to include in my next one.
Perfect. Okay. That's great. Everybody, thank you all for being here. Very much thanks to Tania for blessing us with her wisdom, which we are immensely grateful for, especially because it's for free. So next week, we're going to meet again on Wednesday for our Wealthy Wednesday. Jolene or George is going to be educating us about insurances and especially business-related insurances. I think that's a really good one that Tania brought up today. I'm quite impressed by that. I'm quite excited for it. So I'm waiting for you all to be there for the benefits of your business. Thank you, Tania. Thank you, everybody. Thank you.
Thank you, everyone. Thanks.
Everybody, Dolores, everybody, thank you. Have a good one.
Thank you. Have a good weekend, guys. Bye.